We're on with Rob Zabbia. Rob is my insurance guy. He's one of the smartest guys I know in the insurance business, and as long as being a total class act. So the purpose of this session is to really help consumers understand the property insurance business. When do you need property insurance? What the differences are between different carriers and different kinds of property insurance, and what are the risks, et cetera. So, Rob, take it away. Tell us a little bit about the basics.
So basically, the big thing nowadays that's going on is with inflation, we keep hearing inflation is going up 9%, but building costs are going up more the 20 to 30% range. So what that's doing is it's forcing insurance companies to not necessarily raise rates, but raise the coverage amounts. So we're getting into a situation where people's houses are way underinsured. So there's calculators that the industry uses, third-party companies like Allstate and State Farm, Travelers, all those hire to determine what we should be insuring homes for. So one of the biggest questions I have from people, especially first-time home buyers, is, I'm paying $500,000 for the house and it comes with the property in the school district and all these things that add into the market value. Why am I insuring the house for $525,000? And that is why, because it would actually cost more in a lot of cases to rebuild that house than it does to buy the house. So that's one of the big things that you really need to look at. And if you're buying a house, when you're getting quotes for insurance, a lot of the insurance companies will underquote you to win your business. Because if I quote you at $550,000 and the premium is $2,000 a year, and somebody else quotes you at $450 and it's $1,500 a year, well, you're going to see the $1,500 and gravitate towards that. But what happens is all the insurance companies then inspect the house. And what we do is, like, when we work with your clients, you send us a copy of the appraisal, we plug in the square footage information and we determine what the insurance company is going to want to insure it for. And that's because it's a contract and they have to rebuild the house. They're going to insure it for what they think it's going to cost to rebuild, not what you want to insure it for.
Right. Hey, Rob, can you tell us a little bit about the types of coverages that you'd see in a basic homeowner's insurance? I know that there's a basic property coverage and there's liability coverage. Can you give us a little bit of insight into that?
Yeah, sure. Basically, what the bank cares about is the building, the dwelling amount. So the dwelling amount covers the house itself, what it would cost to rebuild that. So what's included in that is everything that's part of the house. So basically, if you look at like a little dollhouse and you picked it up and you shook it, everything that came out is your contents. So the dwelling is everything that stays part of the house. So your carpets that are wall-to-wall carpeting, your cabinets, your light fixtures, everything that permanently is attached to the house, that's all part of the dwelling. And then your contents, or personal property, is the way it would read on the policy. That's all of your personal stuff. That's all the stuff that would fall out. So your area rugs, your clothes, your TVs, your jewelry, all of that stuff is your personal property. And the thing to know about personal property is policies usually have limits on certain things. So like on most policies, you'll see $1,000 or $2,000 limit on jewelry. You might see a $1,000 or $2,000 limit on silverware. So certain items have limits on them within the policy, like Hummels are specifically listed on some policies that they're limited to $250 or something like that. So it's when you have collectibles and things like that, it's a good idea to make sure you know what the limits are in the policy. Because way too many times I hear of people that have had claims and they didn't find out that they had limits until they had the claim and they were denied the claim. And then you have the other thing that you talked about is liability. Liability is a big problem nowadays because, I don't know about you, but if I stay up late at night because I can't sleep, I'm watching TV, every other commercial is, you deserve just compensation. It's some personal injury attorney looking for lawsuits, and they're going after whatever assets you own, and your home is usually your biggest asset. So liability is important. So we're recommending to everybody that they get umbrella policies if they're buying a home, because
Tell me more about umbrella policy.
Yeah, what's great about an umbrella policy, they call it an umbrella because it covers all of your personal liability. So the big one everybody knows about is Amber Heard and Johnny Depp. So her umbrella policy is what would cover her if, when she lost that lawsuit. So hopefully she has I think it was $15 million. That, but I don't think he's actually going to collect on it. They think they're going to settle. But that is what covers so if you're arrested for harassment, or, you're accused of, of going out with slander, unlawful imprisonment, these things aren't covered by your home or your auto insurance. So an umbrella policy picks up those types of liability.
What other coverages would you normally see in a homeowner's policy?
The one that I've been seeing that a lot of companies, especially the big 800 numbers, because the thing with the big 800 numbers is they never have to see you again. When your clients come to me and we help them with their insurance, they're going to call me when they have a claim. The big 800 number, it's some person that's in Iowa somewhere, and they're selling you a policy and they don't never sell you. So their main thing is they have to sell so many policies a day. So they cut coverages that you don't know about. And the big one I've been seeing is loss of use. So what that is if you can't live in your house because you had a claim, we'll pay for you to stay somewhere else. Whether if you've seen some of these neighborhoods where they pull up a trailer on somebody's front lawn and they live in the trailer while the house is being rebuilt. They rent another home short term, usually like the day of a fire. We're putting people up in hotels. That's loss of use coverage. So what I've been seeing is some of these insurance companies are cutting the loss of use coverage. So you'd have maybe a maximum of 4 or 5 months worth of coverage. And that's how they, like one person, he went with another company over us. And afterwards I called him up and I'm like, well, why'd you go with them? Oh, well, they were $400 a year less. Well, they cut the loss of use coverage. They cut the contents coverage. They only gave him what the bank wanted to get him through the closing, but they didn't explain to him what they were cutting. And people, if you're not licensed, you don't really understand insurance, and you might not think, like, he had $150,000 worth of contents coverage. Well, it sounds like a lot, but when you have contents and you start accumulating furniture and all that stuff, 150 goes real quick.
Got it. You and I have talked about flood coverages and sewer backup and things like that. Tell us a little bit more.
So sewer backup that's not covered by your homeowner policy. It's an endorsement that we add on because, like, during Sandy, it was a big problem. During Sandy, we had that big storm surge, and the storm surge pushed the sewage water from the treatment plants into the houses. Well, that's not covered by the home insurance, and it's not even covered by a lot of companies' sewer backup because they considered that a flood. So if you didn't have flood insurance and you had that, you weren't covered for that. Some companies did cover it, but for the most part, they didn't. So sewer backup is usually if you have a sump pump. A lot of these houses are close to water. They have the water tables rise, so they have a sump pump to keep the water out. If the sump pump fails, the sewer backup coverage would cover you for that. What flood insurance covers is if you have water that accumulates in 2 properties or more, usually about an acre, and it does damage to the home. So it doesn't have to be like Sandy where it was a storm surge. It could just be like Irene, where we just had so much rain that it got into people's homes because there was no place for it to go in that short period of time. It could be a rising river, like that's what you see out in the Midwest, rising river or stuff like that. The biggest thing that always people think of is, well, I don't live anywhere near the water. Well, you don't have to live near the ocean or the bay to be subject. We had a lot of people in Levittown years ago were buying the flood coverage because they're all no basements, they're all slabs, and if the streets got so much rain, they would back up all the time and then get into people's homes. So we do have people in Levittown that carry flood insurance for that reason. So that's what flood insurance covers. And the big thing that's changed is the NFIP, the National Flood Insurance Program, is where 99% of people buy flood insurance from because it's through FEMA. And they've been losing so much money because, like, during Sandy, they had a New York Rising where the state was buying people's houses and then reselling them to people that were going to either knock them down and get rid of them or lift the house to get it out of the flood zone. Because repetitive flood claims is what's costing the government so much money. So what they've done now is come out with a whole new rating plan that the rates are going up tremendously. So if you're buying a home, you really need to know what the new rate is going to be and what the future rate is going to be, because those rates are just going to continually climb. Some houses, the rates have come down. I've seen people benefit from this new plan. But the new thing they put in place is repetitive loss. If there are repetitive losses on a home, the flood insurance is going to cost more. So it's very important to order the flood history on a home. And the only person that can do that is the current homeowner. So you as the buyer can't do it. You have to get the report from the current homeowner. So if they're not willing to get that, and you know there have been flood claims in the past, you might want to second guess buying that home.
Got it. Your primary insurance company is Allstate. You know, there must be 100 different insurers writing in the Northeast right now. Tell me a little bit about the differences between Travelers and Allstate. And let me try that again. Tell me a little bit about the differences between Travelers, Allstate, maybe State Farm, and then some of the other guys, because sometimes I see insurance written on companies I've never heard of in the past.
Well, the thing about insurance is it's risk management. So because it's risk management, insurance companies, they need to make sure they spread their risk. So what Sandy reinforced to a lot of companies is that they were too concentrated of risk. So companies like Allstate, State Farm, Travelers have pulled back on who they're willing to insure. So we work with some of those companies you've never heard of, because for them, they need to spread their risk. A lot of those are Florida companies or Texas companies. And, you know, if things are happening in Florida, Texas, or California, they're probably not happening at the same time in Long Island. So by spreading their risk out, we can bring companies in like that. So the three things you need to look at, besides just the name of the company, probably the most important thing is the financial stability of that company. There's a company called AM Best. AM Best is the industry standard for financial stability. So AM Best rates insurance companies, they rate stocks and bonds, they rate everything out there. So you want to deal with a company that's at least an A- or better, because if they're not an A- or better, they might not survive a storm. There were companies that were B rated that didn't survive Sandy and had to be bailed out. Some of them were bailed out by private companies, like hedge funds came in and bought them. Some of them were bailed out by, companies buying the other bigger companies buying them out. In California, because of the wildfires they had, there were 3 companies that went out of business. And in Florida right now, there are a bunch of companies that are going out of business, not because of storms, but because of fraudulent roofing claims that are putting the companies out of business. So that's the problem when you have a company that's not like Demotech rating. I always, they're Demotech rated A. Well, a lot of these Demotech rated companies can't get an AM Best rating, so they go to Demotech, and the banks will accept it, but they're still not financially stable enough. So you really want to make sure you're an AM Best rating A- or better. Now, the difference between an Allstate, a State Farm, a Travelers, and then these no-name companies is just how they take care of claims. I'll just speak to Allstate because I've dealt with them through Sandy. Allstate has a series of adjusters that fly around the country and follow major disasters, and that's all these people do. We offered to have them stay in our house because they didn't have a place to stay for a while. But we had 3 adjusters, 2 flood and 1 home adjuster that worked in my agency during Sandy, because we had so many claims because we're such a large agency, that they actually sent people to work out of my agency. And I learned a whole lot about them because, they came to my house on Thanksgiving. We had them over our house on Christmas because they lived through that whole thing. And, great people. And this is what they do. And I learned a lot. That was the first major storm that I went through in my career. So I learned a ton about how those storms are handled. And that's the difference between an Allstate and these no-name companies. These no-name companies don't have that. And the problem is some of these no-name companies, and you can look them up. Like I always tell people, Google your insurance carrier before you commit to buy a policy from them, because some of these companies paid fines to the state insurance department because of their practices of claims during Sandy. They didn't have enough adjusters to handle. So there were people going months before talking to anybody. Whereas with Allstate, we had people, the storm happened Monday. We had people staged in New Jersey and Pennsylvania outside of the path of the storm. So once that storm passed, Tuesday morning, we had boots on the ground. Allstate did a better job than most on that. They had trucks at Cedar Creek Park, in Brooklyn areas. They had trucks that people could walk up to and file their claims with. So that's what a company like Allstate can do. I'm sure State Farm and Travelers, companies like that, did something similar to that. Whereas these smaller no-name companies, they just don't have those kind of resources. So you're waiting to get those claims paid. And that's how you save a couple $100 because they don't have the resources to handle a storm like that.
Talking about claims, I know that one of the ways that people can save money is they can take a higher deductible. Can you tell me a little bit about that?
Yeah. So what you need to weigh with that is, what is a deductible? A deductible is your share of the claim. So if you have a $500 deductible, you're going to pay the 500. The insurance company is going to pay the rest. If you go to 1,000, you're going to do that. I'll give you a perfect example. I'm working on a home. It's a $2 million home in Syosset. And by going from a $5,000 deductible to a $10,000 deductible, their premium went from $18,000 to $12,000. So they're saving $6,000. So they go 1 year without a claim. They're saving, $6,000 a year for as long as they have that house. So it's very important to look at the difference in deductibles. And somebody who's buying a $2 million house, they can afford to pay a $10,000 deductible because most likely they're not going to file a claim for 10 or 15 or 20,000, to be honest with you. They're going to wait until it's a major $50,000, $100,000 claim before they're going to put something in. And that's the thing is insurance is for catastrophic loss. It's not to fix your roof. It's sudden and accidental. So it can't be something that's been happening over a period of time. It's when that pipe bursts. It's when the roof blows off. It's when a tree falls on the house. It's not because, there was a slow leak, in your shower pan and your floor rotted out. That's not what home insurance covers. That's a maintenance thing. And a lot of these things to the homeowner are sudden and accidental because they had no idea that these things were going on over a long period of time. But because it's rot and mold, the insurance policies don't cover that. And that's something that's standard throughout the industry. It's not just a specific company thing.
Got it. One of the questions that I get when I recommend you or another insurance broker is, why do I need a broker? I can just go online to Liberty or one of these online companies. And what does a broker add?
So a broker or an agent, and I'll go through the difference, but a broker or an agent, we're licensed and, we go through hundreds of hours of licensing and CE classes to not only learn the insurance laws, but to also stay up to date. And then knowing what the different companies offer. I always hear from people, well, it's apples to apples. Well, yeah, a lot of times somebody who's selling an orange is want to convince you that they're selling you an apple, but they're not. And that's the difference between policies. Some policies on paper, like that person who said he was saving $400 a year by going with another company. Well, they told him it was apples to apples because it had the same deductible and it had the same dwelling amount, but it had lower coverages on the things that people don't look at. So that's what an agent or a broker is going to, and not all of them, because there are some agents and brokers that play the same game. But if you're working with somebody that's good and knowledgeable and cares about you, they're going to make sure you understand what the differences are. Now, we're not here to force you to take those coverages. If you want to take the risk, hey, insurance is sharing the risk. It's just a matter of who's going to pay the claim, you or the insurance company. So if you go with the lesser policy, you're going to have more of the risk. So that's what an agent or a good agent or broker, and like in that situation, he ended up switching his insurance over to me. He told me, he goes, he got 10 quotes for his home insurance. I was the only one that pointed out that there were differences in those coverages. Now, I'm sure the other brokers or agents that he got quotes from probably gave him better coverages than the 800 number did also, but nobody takes the time. You want to work with somebody who's going to take the time to explain, like you take the time to explain to people what it's not just about the rate. It's about the payments. It's about this. There's a lot of different things in mortgages. And I rely on somebody like you to help me in that situation. Well, that's what you really need on the insurance. It's not just a matter of buying a policy because these big 800 numbers don't care anything about you. They'll never see you again. Who are you going to complain to? If we do something wrong here, you're coming to me. And I'm going to one who's going to have to fix it. So we're going to make sure that you're handled properly right up front.
One of the things that I've told my clients is that the best thing about having a broker, having an agent, having somebody represent you, is that when you have that loss, you referenced somebody who might have a water leak, might have $2,000 loss in their home. Knowing that I can call Rob and ask Rob, what do I do? is huge. That's worth $1,000 a year, just because I know that I'll get the right advice, I'll get the right perspective. And so many people don't understand that. Can you tell me a little bit more about that?
Well, yeah, I mean, we work with people because sometimes, those situations, it doesn't make sense to file a claim. If you have, a lot of times we tell people, listen, an appraisal from a contractor before we file the claim. If you have $1,000 deductible and it's $1,200 to repair, it doesn't make sense filing a claim for $250. You're going to lose your claim-free discount. So yeah, those are the things that we look out for because of the fact we do this every day. Whereas if you have an 800 number and you call up and you say, I have a leak in my bathroom, boom, they file the claim. They don't look, I mean, even if you called Allstate, if you bypass my agency, called Allstate and said, I have a leak in my bathroom, they're filing the claim. And then the adjuster is going to tell you you're not covered because it's something that happened or it's below your deductible or whatever. Now that claim is on your record. So yeah, it's definitely worth it to work with somebody who's going to look out for you. And the difference, and I act as a broker and I act as an agent because some companies only work with agents and some companies, only work with brokers. So I have both licenses. And the difference is when I'm a broker, I'm working on your behalf. I represent you. When I'm an agent, I'm working for the company and I represent them. So, we still get paid by you, even though Allstate is paying my check. If you don't stay with Allstate, I'm not getting paid. So we're going to make sure that you're taken care of. We're not going to well, I've gotten into plenty of fights with Allstate adjusters because they didn't want to pay a claim for a client. So that's part of what we do. And the big thing that, when you're dealing with an agent or a broker versus an 800 number is, listen, every company, including Allstate, has bad adjusters. They have people that don't care. They have people that are lazy. Every single company, Allstate included, have that. The difference is if you call an 800 number, you're not getting Warren Buffett on the phone to fix your claim for you. You're not going to get Tom Wilson from Allstate on the phone either, but you're going to get me on the phone. And I know those people that go between me and Tom Wilson, and one of those are going to get it fixed. And I know where to do that. So that's the big thing is we know how to go through those hoops to get to the right person to get your claim paid.
To shift gears a little bit, when I think of public spirit, I mean, when I think of someone who's public spirited, you're the poster boy. Can you tell us a little bit about what you do, for your community?
Well, right now I currently just took over as president of our Chamber of Commerce. I've been a member since we opened up the agency here 26 years ago. And, so I decided to get involved with the board, a couple of years ago and, help the local businesses, especially getting through COVID. I was the vice president getting through that and helping a lot. And we lost a lot of businesses during COVID. So now we're trying to help them get back. We're doing a big seminar coming up on the employee retention tax credit. A lot of my fellow business owners don't know that's available and how much that can help. They think because they got PPP and they got forgiveness that they're not eligible. Well, you are. So we're providing education for our local businesses to help them. There's two things to help them through those kind of things of being a go-between between
Rob,
local. Yep.
Rob, let's start all over again because you're going into the weeds.
Okay.
Let's talk about, and this is going to be edited, so I feel totally comfortable. In fact,
no, that's fine.
Drink
yep.
also.
Yeah.
Let's take it from sort of like what I want to do. I'm going to ask you two questions. One is tell us about how you give back to your community, and then tell us about your passion. So those are the next two things. I don't, like what I'm trying to take out of both of these is a 90-second to 2-minute snippet, if that's okay.
Yeah, that's good. Yeah, I'll do that.
So Rob, one of the things I respect greatly about you is how public spirited you are. I mean, you're the poster boy for public spirit. Can you tell us about some of your of your give back?
So yeah, there's a couple of things that I just took over as president of the chamber. A lot of our local businesses, need help. So we do two things. We're educating a lot of the businesses as what's available out there for help, but we're also bringing the local community to the local businesses through events and things like that. The other thing I work on is helping with charity. I got involved, a friend of mine, Jeff Weiner, was running for Leukemia and Lymphoma Man of the Year. His daughter is a survivor of leukemia, and she had it when she was younger, and she survived it. So he helped raise a lot of money for them, and then he nominated me because I was like his number one fundraiser for
No
him.
good deed goes unpunished.
Exactly. So I said, well, okay, fine, I'll do it, but you got to be my campaign manager. So we ran and we won basically successfully 2 years in a row. And then Laura Meyer, I just nominated her, and now she won. So I started out with leukemia and lymphoma. That was actually the first charity I ever worked with, and we raised 180,000 in 10 weeks. But then I realized that big organizations like that have it. So now I'm working with a lot of your local charities. You have Drug Free Long Island, Mama's House, which works with single moms. A lot of them are, subject to domestic abuse or stuff like that. A lot of these smaller local charities are the ones I'm trying to help now because they need the help more than the big ones that get, big funding.
Rob, what are you passionate about? What are the drivers? What makes Rob Zabbia tick?
So, I mean, the number one thing that makes me tick is my family. I have two awesome kids. They're twins. They're in college. They just finished their first year, did awesome. Both are very competitive. My son plays lacrosse at the college level now.
Is that him over your shoulder?
Yeah, that's him. And that's my daughter. If you look, that's my daughter riding a horse. She competed doing that. They're very, very gifted, smart. They're both involved heavily in school, and my wife and I are trying to teach them, giving back is a big part of what they need to do. And just,
I've met your kids and they're fabulous. So
thank you.
you have a lot to be proud of.
Thank you. Yeah, they're awesome. And I have them both working with me now too. So it's great. While they're home for the summer, I'm putting them to work. So that's the one thing. And then just being, part of the community. I mean, I'm blessed to have such a successful business. I had a great mentor. My dad was an Allstate agent. I went to work for him, and then I became one. And then when he retired, I bought his agency. And most of our business comes from the community, which is why I got involved with the chamber to give back to the community. Just helping people, which is why I like insurance, because we're there for people at the worst possible moments in their life, whether it's, a fire, a major storm, a car accident, or even, unfortunately a death. We're there for people when they need it, and we help them plan out risks. So that's what I teach to my team. It's not just about, winning the sale. It's about making sure people are protected and, like the doctors, like leave them in better condition than when they came in. We won't put people in a worse condition just to win a sale. We're going to make sure that people have the right coverage. And I'm passionate about that because I've seen what happens when people don't have the right coverages, and I see the financial burden it is to you save a couple of dollars on premium to end up paying it for a claim that goes bad.
When I think of Rob Zabbia, I think of three words. I think of integrity, I think of dedication, and I think of passion. And I think you've demonstrated that.
Thank you. I really appreciate it. It means a lot coming from you.